Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing long-term moving averages. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. So, we actually have an interesting development on the TradingView chart, and that is they've actually added some new data that goes all the way back to 2009. Now, I have no idea how accurate this is, but one of the benefits of having this data is that you can look back a bit further in time and start to, to look at older trends and how they, translate to newer trends, right? So one of the things that we have previously talked about is how during the first cycle, this bear market would have held support at the 100-week SMA if we could have extrapolated it out, right? The problem is that we didn't really have the data down here to actually verify that. But now that we do, we can actually go back and look at where the 100-week SMA is. And given the data that we have now, you can see, in fact, that more or less this bear market in 2011 held support at the 100-week moving average, okay? Now, the reason why that's important is because you'll notice a trend as we go from one cycle to another within the bear market and the accumulation phase. So look at the next bear market. From there, we more or less held support at the 200-week moving average, right? So we went from the 100-week holding support to then the 200-week SMA holding support. Now, you may notice there are a couple wicks that go below the 200-week. And it was actually back in 2019 when I first started my channel that we pointed this out and sort of speculated that there's a chance that we could wick down to the 300-week SMA before we can actually get a bull market started. And while it happened, I mean, it certainly did not happen in the exact way that I thought. I mean, we basically went from 10K down to the 300-week SMA in just a couple short weeks, basically. But what you'll notice again is that Bitcoin held support at those levels, right? So if you look at cycle 1, it was the 100-week SMA. Cycle 2, it was the 200-week with a wick to the 300-week. Cycle 3 was also the 200-week, again, then going to the 300-week, right? Very similar move, right? Very similar type of pattern, all things considered, because, in both of these cases, in cycle 2 and cycle 3, the initial bounce occurred off the 200-week, and then later on, we went to the 300-week, right? Later on. And by later on, I mean in 2015, it was a wick down by August of that year. So it actually occurred about 33 weeks or so after the first major bottom. So one of the things to remember is that in 2015, Bitcoin experienced more or less a double bottom. Now, I've heard people talk about this in different ways. Some people say it was a higher low. Some people say it was a lower low. The reason there's confusion is because on some exchanges it was a higher low, on some exchanges it was a lower low, but we shouldn't really spend too much time nitpicking that. It's just a double bottom, right? I mean, if it's within $100 or something, or even a few hundred, or maybe not a few hundred because the price of Bitcoin was much less back then, but as long as it's within a few percent, you might as well call it a double bottom, even if it's slightly lower or slightly above on whatever exchange that you use, okay? So then in the last cycle, you'll notice that we hit the 200-week, and what's funny is, we sort of speculated that the 300-week could come into play just like it came into play over here in 2015. Right? You kind of first held support at the 200, but then eventually we actually hit the 300 before we got the real bull market started. Now, arguably, the bear market ended back over here in January, okay? But that doesn't detract from the fact that anyone who waited until August could have gotten in at the same price. So, I mean, it just is, some people got in early, some people got in later, and then ultimately you had your major run up. So one way you could think about it is, there were probably a lot of bears here, right? And some got in here, or some sort of folded and became bulls here, and then the rest became bulls over here, and then we went up. Now, looking at the next cycle, you'll see a very similar pattern. I mean, there was more volatility during the year after the primary bear market year, but we still held support at the 200 week and then ultimately wicked down to the 300 week moving average, right? So remember, there's ways that you can break this up. So you have your primary bear market year of 2014 and 2018, and then you have sort of the accumulation year, right? The accumulation year, which is 2015 and 2019. And in both of those years, we ended up hitting the 300 week, okay? In both of those years. In this cycle, I actually waited until early 2020, but it was still before the halving, right? It was still before the Bitcoin halving. In this one, it occurred in August of 2015. In the next cycle, it occurred in March of 2020, which again, I mean, it was all right before you had a massive run up in both cases. All right. So then that brings us to today, right? I mean, it's always always great to get the context of what history tells us about what has historically occurred, but what's happened today. So interestingly enough, and we talked about a bit about this earlier in 2022. We talked about Bitcoin, our date with Destiny being the 200 week SMA. And, we got to the 200 week and then we just went below it. Now, we speculated back then that in the same way, you could see us going to the 300 week moving average, right? You could see us going to it. Remember, this cycle, 100 week held a support. This cycle, it was the 200 week with a brief wick to the 300. This one was a 200 week held with a brief wick to the 300. But in this case over here, it was a little bit, it was a little different because this move right here, I mean, it occurred from a much higher valuation. So I think it took a lot more people by surprise. Like this move here was about a 48% drop. This one was like a 63% drop. I still remember waking up and being like, wait, what's going on? Like, it just doesn't seem like this is possible to see the entire asset class down like 50% in a day, when it seemed like things were going so well. But where are we today? Right now, we're still below the 200 week SMA, which is kind of crazy to think about. I mean, Bitcoin is just coming off of a rally to the tune of 51% or so, still reserving the right to go higher, and it's still not even above the 200 week moving average. Furthermore, we also went below the 300 week, which has never happened before, right? It's never happened in Bitcoin's history until recently that Bitcoin went below the 300 week moving average. And we talked about, we floated this idea around of, is the 400 week going to come into play this cycle? Now, first of all, one thing we should say is when we discuss the idea of the 300 week coming into play over here, while it came into play, it actually occurred at a higher price than where we held support at the 200 day. So if you were to, or the 200 week. So if you were to look at the 200 week, by the time we got to the 300 week, the 300 week SMA was actually a lot higher. Okay. So right now, the 400 week moving average is around $14,000, $14,100. So it's still pretty low. And for us to get there, you'd have to see a fairly catastrophic dump, right? Now, remember, if it doesn't occur anytime soon, let's suppose we go to the 400 week before we can sustain a rally to new highs. By the time we get there, the 400 week could be a very different valuation than it is today, right? I mean, if it just sort of slowly continues grinding higher, then by May, it probably is going to be around 15,000. By October, it's probably going to be around 16,000, and so on and so forth. Okay, so it's important to look at these moving averages because it really does show these like long-term support lines, right? Like the 100 week in the first cycle, the 200 in the second, the 300 in the third. Now, I don't know if we're going to make it to the 400, and if we do, it could be a year from now, just like it was back over here with, the December 2018 move to then the March 2020 move. But it is something to look at. Now, there is a couple other developments that they at least deserve our attention, okay? With regards to these long-term moving averages. One of them, and you'll see this talked about, I'm sure, but it's the idea of this cross of the 50 week and the 200 week moving average, which has never occurred before, right? So it came close to happening in 2015. We had a massive rally by Bitcoin and we ultimately avoided it. But right now, it seems like it's highly likely going to happen. So, a lot of people have asked, well, where is Bitcoin going to find resistance? If it continues higher, I imagine this area right here, this region, the convergence of the 50-week and the 200-week also corresponds to the prior local top here at 25K. So that could be a somewhat difficult level for Bitcoin to get past without pulling back first, or and consolidating for a while, or kicking the can down the road. Now, in order to understand what has Bitcoin historically done on an approach to the 50-week moving average, we can go back in time and look. There's been a number of times. Every single time, we more or less got rejected or at least consolidated for a number of weeks before trying again. So in 2019, if you were to zoom in, you'll notice that we rallied on up to it, and then we kind of consolidated for a month before breaking through. Okay, so if that were to play out this time, it would mean, rallying up to it and then spending all of February or something consolidating just below it before trying to break out later on. We also have another example in 2015 where we rallied up to it. That's where we got rejected and then put in a double bottom. That was back in 2015. So we got rejected at the 50-week, put in a double bottom, and then on the next attempt, we broke through. And then if you go look at the first cycle, we sort of got above it very, very briefly, and then had a fairly impressive pullback. I mean, it doesn't look impressive, but it was still 46%. So a 46% pullback after briefly rallying above it. And then it was on the second attempt that we surpassed it in a more sustained way. So then looking at it today, if you're curious what the numbers are, the 50-week is at 25.6K. The 200-week is at 24.7K. So you can kind of see that they're converging at 25K, right? Which again also corresponds to the local top that Bitcoin had back over here in August of 2022. That's going to be a fairly important line in the sand. Now, if we get rejected from it, which is always a possibility, right? If we get rejected, then you still have the bull market support band that's going to slowly start climbing back up, as long as price action stays above it. So that would be your support area, I think, if there's a large pullback off of this, at least first attempt on breaking through the 50-week moving average. Now, I know some people are going to be interested in the cross of the 50-week and the 200-week. Unfortunately, we don't really have any data for it because Bitcoin has never experienced this before, right? It just simply it's never happened. So you unfortunately can't really look back in time to get an idea of what will happen. Oftentimes, golden crosses and death crosses can mean the opposite of what you think. Like there's a lot of times when you get a golden cross, the price will dump, at least on daily timeframes, right? So if you were to go look at some daily timeframes, we're actually not that far away from getting a golden cross. But oftentimes when Bitcoin gets a golden cross, it always sounds really good. But in the short term, you might actually see Bitcoin price action dump. I mean, there are some exceptions, but a lot of times, right, you get the golden cross and then the price, Bitcoin price action might, this was a death cross. This was the golden cross. Here, going into it, you can see a very brief dump, and then we continue the trend, right? The death cross, you got a brief pump, and then we continue the trend. Okay, so a lot of times in the short term on daily death crosses and golden crosses, you can see actually price action go in the opposite direction initially before continuing on with the major trend later on. So we've seen that before, and what's interesting is if you look back at the daily crosses or the daily golden crosses and death crosses, they've actually been extending, and maybe we'll talk about that in another video. But you can see that Bitcoin is coming up here on a golden cross, probably sometime in February, if not by March. This assumes we don't get a massive move back to the downside. If we do, then of course they reserve the right to not see that cross. But if things stay the same, you will likely see them cross. Going back to the weekly chart, though, on this cross of the 50-week and the 200-week, that's probably it's something that, again, we've never really seen before. So, I mean, people are going to speculate all they want about what it means, but the truth is that we've never really seen it. And so I can't tell you, I mean, I have no idea if Bitcoin is going to change course here or not. I mean, you can go look at the S&P and see what it's done in prior golden crosses and death crosses. I mean, back over here when you had a weekly death cross on the S&P, it actually went down into it, not up. So Bitcoin's sort of rallying up into it. Over here in the financial crisis, the S&P dropped going into it. And from the death cross, it dropped another 27% from the death cross, right? If you look at the .com crash from this death cross, remember, Bitcoin dumped into the death cross. This is an example of, right, where you get the cross, but it sounds bad, but then you actually got a short-term rally instead, but then the majority of the trend still continued, even though it was technically a death cross. So this is why I'm saying a lot of times when you hear golden cross or you hear death cross, the short-term trend can often be the opposite of what you might think, right? And we've seen that happen many, many times. And we can briefly go look at what happened in the 1970s. We had plenty of golden crosses and death crosses back then. This was also during a period of high inflation. I imagine it was a very difficult market to trade. You can see that we came close to getting a death cross over here. Didn't actually happen. We did get one here, and we sort of rallied into it. Once we got to it, the market dumped about 20% from that level. And then here we had a death cross as well in 1974. The market was dumping into that death cross. And then from that level, the market dropped another 33%. So that's what we can see with history. But again, Bitcoin has never experienced one, right? It's never experienced one. Now, I don't know what the price is going to be when we do cross it, but historically, we've seen drawdowns to the tune of 20 to 30% upon the cross. If it would occur here, a 20% drawdown would get Bitcoin back to 18K. A 30% drawdown would basically get it back to a double bottom, okay? If the price of Bitcoin is higher by the time that occurs, let's suppose Bitcoin's at 25K when it occurs, then a 20% drawdown would get it back to 20K. A 30% drawdown would get it back to 17.5. Okay, so, and I mean, if it's lower, right? If Powell comes out next week and surprises markets, the price is lower, then of course that would change things as well. But I do hope that looking at these long-term moving averages is somewhat helpful. I want to remind people that, and this is just my own experience, right? I mean, I've said this many times. The year after the bear market year is often a sideways year, okay? Now, so far, that's not been the case, right? It's mainly just been up. But when we say sideways year, that doesn't mean you're not going to go up. In fact, you are likely going to go up and you're likely going to go down. In 2015, we saw 2 rallies to the upside, and then we finally got a third one that was actually real. In 2019, we had a massive rally and then a massive dump, and then we got the real rally that took us to new highs. So while I know everyone's excited, and I don't want to rain on anyone's parade per se, I would still think that the most likely outcome for this year is that it's just going to be a long year for Bitcoin to sort of build out a base. You could think of it as an accumulation year to build out a base and to hopefully have enough strength to really push higher, especially whenever the Fed goes back to looser monetary policy. Now, you might wonder, what could send Bitcoin price back down to some of these prior levels? In the short term, Bitcoin certainly has a lot of momentum. I think the main risks that you could pose to Bitcoin that could send it back down to some of those lower levels again would be if the United States enters a recession later this year, or if it does it in early 2024, or if we have some type of nasty regulation. But I don't really think that regulation is going to hit Bitcoin in the same way that it's going to hit the altcoin market. So with that in mind, I would say that regulation is probably not as big of a risk for Bitcoin. And that's why I say oftentimes that Bitcoin is a better risk reward. It's better risk adjusted. It has better risk adjusted returns, I think, than the altcoin market right now, just because there's a lot more uncertainty with what's going to happen with regulations and whatnot this year. And also, we know that the Bitcoin stands the test of time. It's done so a lot more than the altcoin market, or at least any individual altcoin. The altcoin market as a whole has stuck around. But again, just looking back at history, you'll notice that we've had a bear market year, a sideways year, and in the sideways year, we still had rallies 70, 80%, right? You still had rallies that were quite impressive, okay? This rally here was, 40%. In 2019, this rally was 300%. But I would still look at this in history and say, it's more or less a sideways year after the primary bear market year. We put in a slightly higher low from December 2018, and then we rallied into into a market or a bull market that actually took us to new all-time highs. So I think we're going to repeat something similar to that, right? Where we either come back down and retest some of these levels and figure out, can the bulls hold those levels of support? And if they can, then you sort of get that confidence to go into a bull market to really take out new highs. But again, my speculation remains the same. And I said this late last year. After the primary bear market year, you get a year that's mostly sideways. When you get a year that's mostly sideways, you're going to see rallies. You're going to see dumps. Right now, we've started the rally. We started the year off with a fairly impressive rally. But again, going back to the moving averages, just to wrap this thing up, this is the 100 week, the 200 week, the 300, and the 400. Okay. And every cycle, it sort of seems like we're dropping down a little bit, right? 100 week, 200, very brief visit to the 3, 200, brief visit to the 300. Now we've been spending a lot of time around the 300. Now we're trying to get back above the 200. So again, as Bitcoin continues to move on, it's going to probably slowly drop down these long-term moving averages from one cycle to another. But anyways, that's where we stand today. Hopefully this video was helpful to you. If you guys like the content, remember to subscribe and give the video a thumbs up, and I'll see you guys next time. Bye.